IBC. So all of us as insolvency professional, we face this type of difficulty as to what should be the treatment of different tax liabilities. Okay, so a number of judgments are also there on this. So let's today go through. I have prepared one PPT on this topic, and through which I think I will be able to make you understand as to what should be the treatment of these pending tax liabilities. What is the case laws? What are the case laws on this particular subject, which have been delivered by Honorable Supreme Court, and even Honorable Delhi High Court also has delivered one judgment, and a number of other judgments are also there. Okay, so let's start today's session with this PPT. So let me share that with you, and then we start. Hope you can see it on your screen.
Yes, we can see, sir.
Okay. Yes. Treatment of pending tax liability under IBC. So as you know that tax liabilities under IBC, we are aware that the order of priority has been changed. Okay, so earlier, before notification of insolvency and bankruptcy court, you are aware that we were having insolvency law in the form of Sikh Industrial Companies Act, which was with respect to Sikh industrial companies only industrial companies. And then we were having the provisions under Companies Act relating to winding up of companies. At that point of time, lot of confusion was there as to the priorities. Different taxation laws were providing that their dues will be having charge over the assets of these entities. Like Sales Tax Act, which were there at that point of time, they were claiming that their dues will be having first charge, even better than the charge of the secured financial creditor who are having mortgage over these assets. Then a number of other authorities, income tax dues, they were also saying that they have priority over the other dues. They should be paid on priority basis. Custom authorities and a number of others. So that confusion is not good for resolution of a company, for rehabilitation of a Sikh industrial company, or any other entity which is under insolvency. So at that point of time, it was thought that there should be complete clarity about all this thing. There was another thing which was affecting resolution and rehabilitation of companies, and that was the charge which was being claimed by different statutory authorities. As I said, Sales Tax Department was there, income tax, customs, and a number of others. So all of them, they were treating, and their laws were providing that they will be treated as, they will be having secured charge. They will be having charge over the assets of an entity which is under SICA or otherwise. So because of that thing, the bankers, they were not getting anything in cases where huge statutory dues were there. In most of the cases, you are aware that if a company is sick, then they are out of production for a number of years, and during this period they don't have employees who are working with them, and as a result, returns are not filed, and taxation authorities, they create demands, they issue orders on ex parte basis based on the demands, or based on the returns, or based on the turnover and profitability figures which were there in the last few years. So based on the same, huge liabilities were being created, and you know that interest rate is also very heavy on these liabilities. So as a result, if a company is not in production for 4, 5, 6, 7 years, then in that case, these liabilities, they become very, very high, and which are much more than the liabilities of the secured financial creditors. So as a result, those matters were not getting resolved, and the that was one of the reasons that under Sikh Industrial Companies Act, a number of companies cases remain pending for a number of years. So government was aware of this, and then they said that it was a conscious decision taken by the government of India that the dues of government authorities, especially taxation authorities, their priority should be reduced. And the reason for the same was they said that government of India is having huge amount of dues recoverable from different different entities, or SSEs and all. And in a particular matter, or in these Sikh industrial companies, the total dues in percentage term will be very less. So even if these dues are waived or their priority is reduced, the government of India is not going to affect much, because it constituted a small percentage of the total dues which were recoverable by government of India. So they said that, and these quantities, if these companies they revive, then they start paying the dues. They start paying income tax in future. I'm not talking about past dues. In future, on their profit, they will start making payment of income tax. They start making payment of other taxes, like sales tax used to be there at that point of time, or now they will make payment of what we call GST. And then they give employment to a number of workers. Then workers, the goods and services they produce, which are consumed in the economy by different consumers, and there are a number of other entities which are dependent on these entities for their business, because they are ancillaries to them. So revival of a company, it was considered that it was very important for the development of a country, and it is required for the growth of our economy. So then this conscious decision was taken that the priority of government use is reduced. And this was one of the objectives while IBC was formulated. IBC was enacted at that point of time. Legislature considered this thing, and then they decided that the priority of government dues should be reduced much below the secured lenders dues, and even unsecured financial creditors. Below that, it should be there. Okay, so that is the reason that our preamble also says that the objective of IBC is, one of the objective is alteration in the order of priority of payment of government dues. Okay, so let's see what is the preamble, what preamble says. An act to consolidate and amend the laws relating to reorganization and insolvency resolution of corporate persons, partnership firms, and individuals in a time-bound manner for maximization of value of assets of such persons. So this is one of the objectives: to promote entrepreneurship, availability of credit, and balance the interest of all the stakeholders, including alteration in the order of priority of payment of government dues, and to establish IBBI and for matters connected therewith or incidental there. Okay, so alteration in the order of priority of payment of government dues was one of the objective of IBC, and which you will observe, and we all already know that yes, under section 53, the dues, government dues, they are low in order of priority in comparison to certain other dues. Definition. Now, what should be the treatment of these dues and how they are to be treated? The taxation dues or government dues, how they are treated under IBC. So these definitions are there. You are aware that section 5 and clause 20, it defines operational creditors. And operational creditor means a person to whom an operational debt is owed and includes any person to whom such debt has been legally assigned or transferred. So operational debt should be there, and then there will be an operational creditor. Operational debt has been defined under section 5, clause 21. Operational debt means a claim in respect of the provision of goods or services, including employment, or a debt in respect of the payment of dues arising under any law for the time being in force and payable to the central government, any state government, or any local authority. Okay, so dues arising under any law for the time being in force. So taxation dues which arise under income tax dues which arise under Income Tax Act 1961. Then we have custom dues. Then we have GST. So all these dues, they fall within the ambit of operational debt because this particular definition include them under this operational debt. Operational debt means a claim in respect of, again I am reading, in respect of the provisions of goods or services, including employment, or a debt in respect of the payment of dues arising under any law for the time being in force and payable to the central government, state government, or any local authority. So taxation dues payable to any of these authorities, they will be falling within the definition of operational debt. Then treatment of tax liability as an operational debt under a resolution plan. So all of us, we know that all operational debt, including the taxation dues, they have to be treated as per the provisions of section 32B. 32B provides that how the operational creditors dues will be. Yes.
Sir, one question, sir. This in respect of goods
Yes.
and services. So income tax
Yes.
is not in respect of goods and services. Income tax is by the corporate debtor on the income. So will it be included, sir?
Kindly see the definition. Operational debt means a claim in respect of the provision of goods and services, including employment. So this is one part. Okay. So if these dues are in respect of provision of goods or services, if somebody has supplied goods to the company, to the CD, or he has supplied services, then his dues will be treated as operational debt. Then further it says a debt in respect of the payment of dues arising under any law for the time being in force and payable to these authorities. So these are two separate things. One for supply of goods and services, and then statutory dues also, which are payable as a result of or under any law for the time being in force. So these laws are IT Act or any other act by which some taxation is.
Got it, sir. Got it. Thank you, sir.
Right. Now, section 32B. So definition, as per the definition, the taxation dues will be treated as operational dues or operational debt. But how it is to be treated in a resolution plan? So treatment of tax liability, as I told you, that it is provided under section 30, subsection 2 and clause B. So 32B says the resolution professional shall examine each resolution plan received by him to confirm that each resolution plan provides for the payment of debts of operational creditors in such manner as may be specified by the board, which shall not be less than. So it says that the dues have to be provided in such manner as may be specified by IBBI, and IBBI has specified that by way of regulations. So we are having the CIRP regulations. So in such manner as may be specified. So that specification has been made. So we have to go to the regulations for that purpose. And it further says that the payment of dues of operational creditor shall not be less than one, the amount to be paid to such creditors to be in the event of liquidation of the corporate debtor under section 53. Okay. So it says that the amount which is to be paid to the operational creditor under a resolution plan should not be less than these two. One, amount which is payable to the operational creditor in case company is liquidated. Then as per section 53, the section 53 provides under liquidation how the different creditors have to be treated. So similarly for operational creditors also, the treatment has been given under section 53. So we have to go to section 53 and then determine that if the company goes into liquidation, then how much money these operational creditors will be getting. Okay, so this is one. Second is the amount that would have been paid to such creditors. If the amount, such creditors means operational creditors, if the amount to be distributed under the resolution plan had been distributed in accordance with the order of priority in subsection 1 of section 53. So then it further says two things it is saying. One, that the amount which will be or in other words, liquidation value payable to the creditors. Liquidation value payable to the operational creditors. For example, if in a resolution process, the assets of the CD, the valuation of the same is, for example, 100 crore. Okay, so this is the liquidation value which has been determined as per regulation 53. 35. As per regulation 35. So 100 crore is the valuation of the assets or liquidation value of the assets. Then you have to apply section 53, and then you have to see how much money the operational creditors will be getting. Okay, so that figure, for example, comes to 5 crore. For example, out of 100 crore, if we distribute 50, that 100 crore under as per section 53. So assuming these operational creditors, they get an amount of rupees 5 crore. And operational and the resolution applicant, he has offered 110 crore, for example. So liquidation value is 100, but the resolution applicant, he has offered 110. So clause 2 says that you have to apply section 53 to the amount which is to be distributed. So the amount which is offered by RA is 110. So you distribute that as per section 53(1) and then see how much these operational creditors will be getting. For example, in this case, the OC, they get 15 crore. Okay, so higher of these two. So that will be how much? 5 as per clause 1, 5 crore, as per clause 2, 15 crore, whichever is higher is 15 crore. So a resolution plan must provide that the amount payable to the operational creditors will not be less than this amount of 15 crore. Okay, so why this kind of provision is there under this law, IBC? This provision is there in order to ensure that whatever are the rights of these creditors, operational creditors, they get at least that much of money. So they are not there. Operational creditors are not there in the COC. In COC, we have only financial creditors, secured as well as unsecured. So the fate of these operational creditors, that is to be decided by COC, though they are not having any say. So law has provided some safeguard to take care of the interest of operational debt. So law says that if the company is liquidated in place of there being a resolution plan, if company is liquidated, then how much they will be getting? So that must be guaranteed to them. At least that much money should they must get. Okay, so this is the safeguard for the operational creditors who are not there in the committee of creditor and are not having any say. And then subsequent clause 2, it was felt that in many cases liquidation value is very low. Okay, for example, if liquidation value is only 50 crore and actually business valuation is much higher, for example, 200 crore. So they say that OCs should also get the benefit of the same. Okay, so then they say that the amount which is offered by the either by the resolution applicant, that should be distributed as per section 53(1), and then we should see how much money these operational creditors will be getting, and that should be considered here. So higher of these two, a plan must provide that they will be getting higher of these two. Okay, so now section 53, if we apply section 53, then the different kinds of operational creditors are there. We have workmen, we have employees, we have suppliers of goods and services, and then we have statutory creditors. So normally these four kinds of operational creditors are there. Okay, and all of them, they are differently treated under section 53. So you know that operational creditors like workmen, they have better priority in respect of their dues for the last 24 months. Employees, they also get a better treatment in respect of their last 12 months dues. Then statutory creditors are also there in a better position than the remaining operational creditors, okay, for their last 24 months dues. Okay, and then the other operational creditors, which are suppliers of goods and services. So when we are applying this particular section, then we have to see that their dues are calculated, or their dues are calculated as per their respective rights. Okay, so a plan, as on the date when plan is being formulated, then resolution applicant is not having access to that. So that was the reason that only these clauses were required to be incorporated in the resolution plan, that the OCs, they will be getting higher of these two. Okay, and there is another thing here in this particular clause B. B says provides for the payment of debts of OCs in such manner as may be specified by the board, which shall not be less than these two. Okay, so that means if someone is providing higher amount than these two figures, so then will there be the compliance of this clause B, or that will be violative of this? So if somebody is saying that liquidation value is 50, so this clause says liquidation value is, for example, in respect of OCs is 50, and the amount to be distributed as per subclause 2 is, for example, 60. So higher of these two is 60. So then this clause says amount payable to them shall not be less than 60. Okay, if someone is providing that the amount to be paid to operational creditors will be 70, so then we are having compliance with this clause, because the amount is not less than 60. But if we provide in the plan that we will be giving them 58, then there is a violation of this clause. And if we are saying that the OCs, they will be getting higher of these two, we say that if we provide in the resolution plan that they shall not, the amount payable to them shall not be less than. So then there is no clarity in the plan as to not less than means it can be, if it is 60, then not less than means it can be 65, it can be 70. Okay, so in some of the cases, Honorable Adjudicating Authority has raised this issue. They say that if we reproduce the same clause there in the resolution plan, then they say that you have not specified whether you will pay them 60 or 80, 70, or whatever higher amount than 60. So because this clause says which shall not be less than. So there has to be a clarity in the resolution plan. You may provide that the operational creditor will be paid higher of these two, in place of saying not less than these two, these two figures, and whichever is higher. So better is you must say that they will be getting higher of these two. Okay, so that will be, otherwise complications have been there, I have seen in some matters. Then, so it was provided in clause B that the payment of due debts of operational creditors in such manner as may be specified. And this specification is 38, regulation 38, sub-regulation 1, clause A. Okay, clause A of IBBI CIRP regulations, we call them. So 38 specifies, regulation 38 specifies mandatory contents of the resolution plan. And its clause A says the amount payable under a resolution plan, clause A, to the operational creditors shall be paid in priority over financial creditors. Okay, so then in priority over financial creditors, so whatever amount is payable, which has to be higher of those two figures, that should be paid in priority over financial creditors. So reason for the same is that we are giving them exit. We are giving them only the liquidation value. Okay, so then they should be paid on priority basis rather than first paying the dues of financial creditor and after that, because these you are ensuring or you are providing in the plan that they will be getting this much liquidation value, at least liquidation value. So if liquidation value is being paid to them, then they should be paid on priority basis. Then the financial creditors who have assessed the viability of the company and they have taken the decision to support the resolution plan. So even a plan is saying that the dues will be paid over a period of time, and financial creditors, they have approved that plan. So that means they have taken a conscious decision to continue with the company, and they know that yes, they have assessed the viability of the company, and even if their dues are being paid over a period of time, they don't think that there will be any risk based on their assessment. Okay, so in view of the above, the tax liability has to be treated as an operational debt under IBC and should be dealt with as per the treatment provided under section 32B, read with regulation 38 1A of CIRP regulations. So now coming to the government dues. So these taxation dues, as we said that as we saw that they have to be treated as operational debt, then they have to be treated as per section 32B. That means minimum higher of those two figures have to be provided in the resolution plan, and these dues, whatever is provided in the resolution plan, should be paid to them in priority over financial creditor, both the financial creditor, whether secured or unsecured financial creditor. Binding effect of the treatment given to a tax liability under a resolution plan approved by Honorable NCLT. Suppose there is a resolution plan, and that resolution plan says that against the tax liability of rupees 100 crore, the payment of rupees 5 crore only will be made. So whether that clause or that treatment is binding on the taxation authorities. So that is the question, and answer to that question is provided under section 31 of IBC. Section 31 of IBC provides binding effect to a resolution plan approved by Honorable NCLT, and therefore a resolution plan is approved by as approved by the Honorable NCLT if a resolution plan approved by Honorable NCLT, the same is binding on all its stakeholders, including the central government, state government, or any local authority to whom a debt in respect of the payment of dues arising under any law for the time being in force, such as authorities to whom statutory dues are owed. Section 31 of IBC, let's go through section 31 as to what it says. So it says, if the adjudicating authority is satisfied that the resolution plan as approved by the COC under section 4 of section 30 meets the requirements as referred to in subsection 2 of section 30, it shall by order approve the resolution plan. which shall be binding on the city, its employees, members, creditors. And creditors including the central government, any state government, or any local authority to whom a debt in respect of the payment of dues arising under any law for the timing in force, such as authorities to whom statutory dues are owed, guarantors and other stockholders involved in the resolution plan. So that means plan is even binding on the central government, state government, or any local authority. But to what extent this plan is binding on them? Is each and every plan is binding on these governments? Is each and every plan is binding? All provisions of a resolution plan are binding on these government authorities? Any answer?
Previously, it was like that only, but recent judgment of
Sorry,
Supreme Court has created controversy. Because
sorry, Anil, you are saying that it is binding?
no, I am not saying it is binding. I'm saying
Hmm.
earlier it was construed as a binding on all the statutory departments. But
Okay.
now, even
Huh.
it, when it was supposed to be binding, the
Hmm.
departments were not giving benefit of the resolution plan approved. Now,
Hmm.
after this judgment of Supreme Court, they say the law in operation. Whatever is the law of that law, of that act, that will be superseding the IBC.
No, it is not like that. Okay.
It
Any
is
other
binding, sir. Binding, sir.
binding?
Yes, sir. It is binding.
Okay.
Yes, sir.
It may be another question
Please, sir.
that though it is binding, but it is another matter that they are not implementing it. But under law, it is binding. Huh?
Please.
So you are saying that. Okay. So no, it is not that each and everything is binding. Whatever is provided in the resolution plan, it is not that each and everything is binding on these authorities, government authorities. Kindly see here, it which shall be binding on CD, its employees, members, creditors, including the central government, state government, or any local authority, to whom a debt in respect of the payment of dues arising under any law for the timing in force, such as authorities to whom statutory dues are owed. So only to those authorities to whom a debt in respect of payment of dues under any law. So like in IT dues are there, or custom dues are there, or GST dues are there. So to that extent, to the treatment, whatever treatment has been given to these creditors under the resolution plan, that will be binding on them. Okay, so there, with respect to their past dues, whatever treatment has been given in the resolution plan, that is binding on them. But if a resolution plan says that future reliefs and concessions will be granted by these authorities, whether that will be binding on these governments?
Sir, future relief.
No, sir. No, it will not be. Sir. These are concession will not be binding, sir.
Correct. Correct. So 31 is there, which says it is binding, but only to the extent of treatment given to their dues, past dues in the resolution plan. Even adjudicating authority is not having the power to grant any relief or concession, future relief or concession to any corporate debtor.
But sir,
And
in one recent judgment of the Supreme Court, they say that the section 53, the statutory liabilities will take over, will be at par with the secured creditors, and the law of the GST or the state tax, income tax, if they have a security on the assets of the corporate debtor, then that will be there.
so Anilji, we will be coming to that.
Yes, sir.
I am having some slides on that issue with respect to that issue also. But presently, what we are considering is that whether future reliefs or concession in the resolution plan, whether they are binding on these governments.
They
So
are not binding, sir.
answer to that is no. Whenever as IRP, RP, we are considering a resolution plan, we must see that the resolution plan does not contain anything, any relief or concession for future, except that as per the policy of that government, if some relief or concession is available, or as per the provisions of that particular law. So we know that Section 79, for example, Section 79 of Income Tax Act is there. Government has changed Section 79, and it says that if change of management is taking place pursuant to a resolution plan, then Section 79 will not be applicable, provided an opportunity of hearing is given to the concerned commissioner or principal commissioner of income tax. Okay, so if that law provides that, as RP, resolution professional, we have to see that this 32E, clause E of Section 30, subsection 2, which says that we have to see that it is not in violation, or it should not contravene provisions of any other law for the time being in force. If our resolution plan is providing for some relief or concession which is contrary to the provisions of any law,
yes, sir,
in that case we are not complying with 32E. So if resolution plan says that income tax losses will be carried forward for a period of say 10 years. Okay, though we know that it can be carried forward only for a period of 8 years. Okay, so if we are saying that no, beyond that period it should be carried forward, then it is in contravention of Section 72, subsection 3.
Sir, sorry to interrupt.
Sir, that is not a liability, sir.
May I ask one question?
Yes.
Sir, in the Rainbow Papers judgment,
Yes.
there was, it was held that, these statutory dues, when there is a provision in the relevant state act, then they should be given the priority over the other debts,
That is what I was telling.
Hey, no, we are not considering that particular aspect now. It is there in the subsequent part of this presentation. We will definitely be discussing that. Presently, we are not discussing as to whether their dues are secured or unsecured. So what we are discussing presently is that their dues, whatever treatment as per the provisions of IBC, that is required to be, that has been given in the resolution plan. If suppose we are secured, if suppose certain statutory dues are secured, then they have to be treated as per Section 53(1), and treatment has to be there in the resolution plan as per Section 53(1). So after that, if that treatment is there as per Section 53(1), then in that case, the authority will be bound. Income tax authority or whatever authorities are there, they will be bound by the treatment. And if they feel that their treatment is contrary to the provisions of Section 53(1), they are entitled to more than what is provided in the resolution plan, then in that case they will be filing an appeal before Honorable Appellate Authority. Okay, so here what we are discussing presently is that whatever is provided in the resolution plan with respect to their dues, and that is as per the provisions of Section 53(1), then in that case that provision of law will be binding on them. And other than that, so here it clearly says that with respect to the dues only, payment of dues arising under any law for the time being in force, so to that extent it will be binding on them. But if a plan is saying that the income tax authority will be granting 10 years tax-free period, then that is not binding. And that is the reason when, as an RP, we are formulating or we are examining a resolution plan, we must see that future reliefs and concessions should not be there. If they are there, then the clause should be it should be written there in the plan that the relevant authorities will consider granting these reliefs. Will consider granting, the meaning of the same will be that those authorities will be having the discretion to either provide or not to provide the reliefs. We should not write that these authorities will provide. We should write these authorities will consider to provide these reliefs and concession. That is one thing. Secondly, the plan must provide that even if these reliefs and concessions are not provided, RA will still be implementing the resolution plan. Okay, so this type of clause should also be there in the resolution plan.
Sir,
Okay.
one observation, sir. There are two
Yes.
observations. One is that, sir, you are saying that the he should write for the relief and concession the relevant authorities will provide. But if the
No.
Income Tax Act says that it cannot be carried forward more than 8 years, so how
To consider to provide,
so
Anilji, but I'm saying,
how that relief he can even seek when the law does not give right to the authorities. Law is law. The carry forward is not with the discretion of authorities. Carry forward is as per law, sir.
Anilji, I will tell you. Actually, Anilji, under income tax, under Sikh Industrial Companies Act also, there was at that point of time, the income tax department was having a separate team for the purpose of considering these applications.
Okay.
And they were provided the authority by CBDT to consider granting these reliefs and concessions, and even certain changes were made to the law at that point of time.
No, change of law is okay, sir. Change of law is okay.
Coming, Anil. You must be aware of the same. So if he is writing this, you can't say remove it. You can't say, because he is providing to consider only. So consideration, if there is no provision under law, they will reject it. IT authorities will reject it. Okay, but you can't say as RP that no, I will not allow you to approach these authorities. When he is specifically mentioning in the resolution plan, that even if these reliefs and concessions are not provided, he will still be bound to implement the provisions of this.
Okay. That solves the problem, because
yes,
it is unconditional. It is not conditional.
Correct.
Yes, sir. So he may. The one more observation, sir. That as you write, though you said that Section 53 provides for some amount to be paid to the operational creditor, but sir, in majority of the cases, the amount proposed by the RA is far less even payable to the secured creditors. So, to be very candid, the operational creditors do not get a fair treatment in this IBC process, sir.
No, Anilji, I don't agree with you. If you say that they are not getting that treatment, or they are not getting proper treatment, reason for the same is, Anilji, in the resolution plan, whatever their rights are, otherwise, if you don't, resolution plan is a kind of out of the court settlement proceeding. Okay, and you know that after that, if a resolution process fails, then consequence will be what? Consequence will be liquidation. And under liquidation, Section 53 will apply, and Section 53 is based on our contract with these parties, like secured creditor, like bankers are there. Okay, they are giving the loan to these companies on the security of certain assets. You can't take away those assets. You can't take away those securities and say that no, I will distribute the money to the operational creditor. You can't. Okay. Second is, operational creditors, when they are supplying the goods and services, they know that they are operational in nature. They are unsecured in nature. Okay, and then in a company, you know that secured financial creditor, a bank is giving the money to them for the purpose of setting up a manufacturing unit, for example, and that dues are to be paid over a period of time. Okay, and substantial amount of money is given to these borrowers, and which is utilized for creating these facilities. Okay, so huge amount of stake is there for these secured creditors. And then you see operational creditor. Operational creditors, they are supplying goods and services in very small lots. And when company is running, they are getting their profit every year, or with every payment, they are getting their profit. And whenever this company goes into the problem, at that point of time, there may be one consignment for which they have not been paid. There may be 2, 3, 4. But it is not like the secured creditors, the amount they have paid, which is to be repaid over a period of time. And there may be some installments paid, but substantial part is still locked up there. Okay, so I think they are on different footings. Okay, and the secured creditor, I have heard about it on a number of occasions that the operational creditors, they are not getting a fair deal. But kindly see, these bankers are also dealing with the money of small depositors. Okay, and if you change these rules, you can change in section 53. One, you can provide that all the creditors, they will be paid at par. But see, what will be the consequences? Consequences will be that these bankers, they will say that they will, first of all, they will increase their interest rate, because they know that in case of failure of the business, they will be getting a small portion of their dues only. So they will increase, because higher the risk, then as higher risk is there, they will increase their interest rate. Second requirement, second effect will be that they will be insisting for a much higher level of security. Okay, so presently they say that, okay, you contribute 25% only, borrowers should contribute 25%. Okay, so that means 75% is being contributed by the banker, and 25% is being contributed by the borrower. But in that case, they will insist that, okay, I am contributing only 40%, and 60% is to be contributed by the borrower. So that will be affecting our businesses very badly.
No, sir.
So entrepreneurship will suffer very badly. People, they will not be able to start new ventures, because they will not be able to raise money from the market, money from the bankers. Okay, so I think these things will be having very serious consequences for the economy.
Sir, I partially agree with you, but the word I use is the fair. It may be legally tenable. And now the logic you gave that the operational creditors were not having security, they were unsecured. Actually, financial creditors have that muscle or the strength to get security before they provide loan. Each operational creditor does not have that kind of a privilege to ask for the security before they supply. Number one. Number two, when the concern is going good, the financial creditors are also getting interest, huge interest and income from the borrower. So, and the credit is provided to the entrepreneur by both. Operational credit is also credit is also credit. The business is run for what purpose? For acquiring capital assets and working capital. So working capital is being provided by the operational creditor. So my only, before we proceed further, my only submission is that it is maybe legally true, legally correct, but it is not fair, sir. I don't agree that it will increase the hardship of entrepreneurship. It is
No.
It is even if they are secured. You see the kind of NPA we have. The operational creditors are very small amounts, sir. You know,
Anil,
they are in a position to do diligence before they disburse. They are large institution. Every operational creditor is not having that kind of infrastructure before he checks the credentials of the buyer. That is my submission, sir.
Okay. So Anilji, actually, the secured creditor for unsecured creditor or small suppliers, you know that yes, they should be treated in a better way. Earlier, they were totally dependent on these big business houses, because a small creditor, a small supplier, he's supplying some goods and services, and then he's totally at the mercy of those big business houses. But now things have changed a little bit, and this change has been brought in by this IBC section 9. I think the biggest beneficiary of these provisions has been the small operational creditors. Though what they have done now is that they have increased this threshold to 1 crore. Yeah. As a result of same, these smaller creditors, they are not able to get the benefit of section 9. Okay, otherwise, I think earlier, this was a very good remedy which was made available to these suppliers and operational creditors.
Yes, sir, we can proceed further. Yeah.
But I think Government of India has been doing something for MSME and all. Certain provisions have been there that they will be if they are not provided within a specified period of time, then they are having certain remedies available to them. Interest will also be there, payable to them, and all those things. So that problem is there. No doubt that smaller creditors, it is difficult for them to deal with big business houses. But at the same time, if we are talking about this treatment under Section 53, Section 53 treatment is based on our
existing laws,
present
sir. Yeah.
existing laws. And then why these secured creditors are being given better treatment, and reason for the same is to facilitate credit to the businesses. If you remove these provisions, or if you suppose you say that 10% of the, for example, 10% of the sale proceeds of the liquidation estate will be distributed amongst the operational creditor. You can have this type of provision under law. You can change Section 53, Government of India or legislature can change Section 53. In that case, it will be having huge impact. Then as I told you, that cost, the lenders, they will be increasing their interest cost, and we may become non-competitive in comparison to other businesses outside, our competitors outside India and all.
Okay,
And
sir. I think we can proceed further. I got it, sir.
Sir, I would like to add here, with humbly. My thing, but the thing, whatever discussion going on, what I have observed is that, see, in order to get through your resolution plan succeeded in the hand of adjudicating authority, you have to be compliant of the regulations.
Correct.
If you violate any of these, your resolution plan will not get through.
Correct. So I have a small question. Am I audible?
Yes.
Now, yes. Suppose there are tax credits available, like your cash reserve registers have got a credit, and there is a debit, which is an expense, or the liabilities which have to get extinguished at the end of this duration, which is mentioned in the resolution plan, that all these liabilities will get extinguished, but all assets will be taken care of by the resolution applicant, and it is an approved resolution plan. So will normally, if it was a normal circumstance, these assets could have been, set off against the liability by the tax authorities. But suppose what happens to the SRA after he takes over the asset, and there are liabilities which he wants them to be, nullified, and he wants to take care of the tax credits to his advantage for the near future. Is that a possibility? And will the tax authorities entertain something like this basis Section 31?
Okay. Kanakji, there is one thing. I think what you are asking me is that whether set off, if you are having amount payable to a particular entity, and then you are having amount recoverable also. Okay, so whether that set off will be allowed if suppose there is some credit available and then there is a liability also. Okay, so according to me, and there is a regulation in our liquidation regulations, there is a provision which says that the set off has to be given. So if there is a debit as well as credit in respect of a single party, then you must give benefit of set off to them. Similarly, if suppose I am having some refund due from income tax authorities, suppose I am having a refund of rupees 10 crore from income tax authorities, and then I am having liability of 50 crore. Okay, so what I do as per the provisions of law under the resolution plan, I say that 50 crore is not payable because their liquidation value is nil. But this 10 crore refund will have to be given by them. Yes. So I don't think it is proper. They will have to, though I am having one contrary judgment. I think there is recently I have observed some judgment which says that the amount payable, these are two separate things. And in case, so I don't agree with that judgment. I'm not aware actually as to what I'm not able to remember the name of that that judgment. But this kind of judgment has come very recently. I don't know whether it is some High Court or Honorable Supreme Court. Okay, but according to me, if you have to recover some money from someone and at the same time you have to pay some money, that has to be set off. You can't say that I have to recover 10 crore from you, you have to pay that. But I have to pay you 50 crore, so that reduces to 1 crore only, or that that is to be totally. So I think 50 crore is to be adjusted against 10 crore, and then 40 crore has to be given treatment under the resolution plan.
Sir, there are two sets of situation. One is the government department, income tax department. Now the income tax department for various years, 1 year may be liability, other year may be refund. So when the CRP is going on, the liquidation process starts, they have to, income tax department has to submit its total claim as on the commencement of CRP. So that is one situation. The department will submit a claim for the net amount, because department has to pay for a particular year and recover for the dues are there for another financial year. But this is one situation, sir. The other scenario is in a company where one party is a supplier and one party is a customer also. So corporate debtor is selling finished goods and corporate debtor is buying raw material from the same party.
Correct.
So now they are debtors and creditors. Now that set off is possible during CRP?
100%. 100%.
But it was not allowed in one of my cases, sir.
Yes, I know. I know there was one matter where it is not allowed, but I think set off is a statutory right. It can't be denied.
It was clearly declined. It was said that for that you have to submit claim.
Assist with that.
Anilji, if it is the only requirement is that the party should be one. You can't say that holding subsidiary, holding you have to take money from.
No, party is same, sir. Party is same,
subsidiary you have to pay. So then in that case, set off is not possible.
No, party is same, sir.
Acha. In that case, according to me, it has to be allowed. And I think our regulations are there, which liquidation regulations, which clearly specify that set off has to be allowed.
Sir, I'm talking about CRP,
can I have the
not liquidation. Liquidation is okay.
Liquidation regulation is there.
Yes, sir. Sir, as per my knowledge, set off under the liquidation process is allowed under law, sir, under the code. But set off on the CIRP, as per my knowledge, is not there, sir.
It's not there, sir.
Yes,
It is.
So there is no provision under the code for set off during the CIRP period, sir.
It's not. Kindly understand. Please, somebody, the rights which are there under liquidation, the same rights you are having in resolution also. Kindly see what is the difference between resolution and liquidation. I will tell you about that. Let me tell you about that particular regulation where it is provided that the set-off is allowed.
This is regulation 29, sir, of the liquidation process regulation. But under CIRP regulation, there is no provision for set-off, sir, as per my knowledge, sir. I may be wrong.
Sir. That is what I feel, sir.
No, but same thing applies to this one also. Let me clarify to you as to what is the difference between resolution process as well as the liquidation. Kindly see resolution process I start with the very basic thing, which is insolvency. So what is insolvency? Insolvency, as all of us know, that insolvency is a condition or is a state or is a situation where a creditor is not able to pay its dues. I think I will take 10-15 minutes to explain this to you. So, Pavanji, I will ask your query. I will, so 1 minute, let me explain this.
Sir, excuse me, can you please go to the presentation mode?
Sorry, Bhuvneshwari ji.
Can you please go to the presentation mode in your screen so that the screen is bigger? It's a slide mode. Please go to presentation mode.
Okay. 1 minute.
Thank you.
Okay, I will have to take some help from someone.
On your right hand side bottom, you will see a icon for presentation mode.
Okay.
Bottom.
Bottom only. No, it is not there. Optimize screen. No, it is not there. Let me check. Let me ask someone. Okay. हेलो, एक मिनट इसको स्वस्तिका को भेज सकते हैं? हाँ, so coming to that particular issue relating to resolution, insolvency. So as all of us know that only 1 minute. ये full screen हो सकता है इसको? Close window, I think. Yes. Is it better? Is it better now?
Yes, yes, very good. Thank you very much.
Okay, thanks. So insolvency. So as we know that under IBC, we are having a definition which says that if there is a default of 1 crore or more with respect to companies, so that is insolvency. Okay, so there can be Bhupesh ji, please mute yourself. Bhupesh ji, please mute yourself. Yes. So insolvency situation is the definition which is provided under IBC is that if you have committed a default of more than 1 crore of rupees, so that is insolvency. And this definition is based on cash flow, or in other words, the default based definition or cash flow based definition, because default will be if you are not having the cash flow to pay the liability. There is another kind of definition of insolvency, and which is balance sheet based definition, or the definition based on net worth, or we call that net worth and balance sheet based definition. So net worth or balance sheet based definition is where your liabilities are more than your assets, or in other words, your accumulated losses are more than your net worth. So if you have eroded your net worth fully, okay, so then you are insolvent. Okay, so earlier under SIC Industrial Companies Act, we were following this definition, or we were applying this definition, which was based on balance sheet based or net worth based. Okay, so so there, if accumulated losses are more than the net worth, then what is the meaning of the same? If your net worth is, for example, only share capital is there in your net worth and some free reserves. Suppose 100 crore is your net worth, 100 crore is your share capital, and reserves are, for example, 20 crore. So 120 crore is your net worth. And you are having accumulated losses, though nowadays accumulated losses are forming part of reserves. So negative reserves will be there. So suppose your accumulated losses are 130 crore. So that means you have eroded your net worth fully. You have eroded your share capital. You have eroded your reserves also. Now you are negative. You have eroded promoters' funds. Now you are doing your business based on the funding which is provided by the creditors. Okay, so promoters, they have eroded whatever they contributed. Entire money with which you are trading now belongs to the creditors. Okay, so that is another kind of insolvency. So the other definition of insolvency is when your liability or your liabilities are more than your asset, or your losses are more than your net worth. Okay, so earlier, as I told you, that we followed the definition which was based on balance sheet or net worth based. Now we are having the definition which is based on cash flow or default. Okay, now what should happen if a company or if an entity is insolvent? What should be the consequence of the same? So consequence of the same should be that this type of company should not be allowed to carry on business. Why it should not be allowed to carry on? Why should it not be allowed to make efforts for its resolution or revival? Okay, so answer to the same is that if a company has committed default or has become insolvent, the meaning of the same is that the company is not in a position to pay its debts, pays its dues as and when they arise. And if we allow this type of company to continue with its business, then what will happen? It will continue to contract further liabilities, knowing fully well that it will not be able to pay them. It will purchase material from the market, knowing fully well that it is defaulting to its existing suppliers and creditors. It is continue to employ its employees, workers, employees, and it knows that it has not been making payment of their salaries, etc., for the last many months. So this type of company should not be allowed to continue. Otherwise, it will be committing default, committing fraud in the market. If you are obtaining material on credit from the market and knowing fully well that you will not be able to pay them, so it's what? It is fraud. Okay, so this type of activity is called fraudulent trading. When you are insolvent and still you are continuing your business, then that is called fraudulent trading or wrongful trading. Section 66 of IBC. Yes, you must have seen the heading of that section. Someone was saying something?
Yes, sir. We got it. We agree with you, sir. It is right.
Okay. So an insolvent entity should not be allowed to carry on with its business. Otherwise, it will defraud the people from the market. So this is the this was the practice earlier worldwide. And under our Companies Act also, you must be aware that under 1956 Act and even 2013 Act also, the provisions were that if you have made a default earlier, I think it was there in that relevant section, it was provided that if you have committed a default of more than rupees 1,000, I think. So then in that case, you can file an application for, your creditor can file an application for winding up of the company. So reason for the same was that defaulter companies or those insolvent companies should not be allowed to carry on with their business and they should be wound up. So this was the position earlier. However, for some period of time, worldwide, it was being felt that the company should come, this type of company should not be pushed towards liquidation. Rather, an attempt should be made to see that if we can save any of these businesses. So for that purpose, they said that there should be an insolvency resolution process. Even SICA, Sikh Industrial Companies Act, was also a mechanism for insolvency resolution of Sikh industrial companies. Now, SICA is repealed when this IBC came. And under IBC now, you will see that before liquidation, we are having these provisions for insolvency resolution. Similarly, for individuals also, before their bankruptcy, we want to give them a chance to settle with their creditors. Okay, so before liquidation and before bankruptcy, these processes have been prescribed. And objective here is that a chance should be given to them so that they can make an attempt to revive themselves. Okay, so these processes, the insolvency resolution processes are, what is the nature of these processes? These processes are out of the court settlement kind of proceedings. Why I'm saying so is that you will observe, or you must have observed, that insolvency resolution process, all the powers are with the creditors, and the court or adjudicating authority is having only limited powers. You must have seen that in insolvency resolution process or CIRP, we have committee of creditors, and committee of creditor is having all the power, appointment of IRP, RP, though finally that is approved by Honorable NCLT. But the powers are with the COC, and they recommend, and that is to be accepted by Honorable Adjudicating Authority normally. And similarly, a resolution plan is formulated. Your entire reporting is to the COC only. Each and everything you have to report to COC. And then after that, resolution plan is approved. Once that plan is approved, then Honorable Adjudicating Authority has to put its stamp on that resolution plan after considering that the process has been properly followed, processes which are prescribed have been properly followed. So that is the limited power which are there with the honorable adjudicating authority. However, if CIRP fails, then next process is liquidation process, and in liquidation process, creditors are not having any powers. All the powers are with the court. So the liquidation process is a process which is conducted by the court through the liquidator. So our entire reporting of liquidator is to the adjudicating authority, not to these creditors. But recently, IBBI has increased the role of creditors. Though still the role of SCC, which is not only creditors, it is SCC is Stakeholders Consultation Committee. Even representatives of shareholders are also there in that committee, though they are not having any voting power. But the SCC is having only recommendatory power. Okay, so this is a court-driven process. Liquidation is a court-driven process, and the first process is a process where entire authority is with the COC. Okay, so these two processes are different. And then I told you that this is out of the court settlement kind of proceeding, and the reason for why we say that this process should be completed within a period of 6 months, or which is extended by 9 months. Reason for the same is that during this period, the creditors' rights have been suspended because of this moratorium. Okay, otherwise the liquidation should have started by now. But now, for this process, we are suspending the rights of the creditors. And then because these creditors are suffering during this period, we want to keep the time period for this process very minimal. And that is the reason that 6 months and then 9 months, and now presently it is maximum 330 days time period. Okay, is there. Now, question was that whether their rights are different under liquidation and insolvency resolution process. According to me, insolvency resolution process has to be based on, if under liquidation we are having different rights of creditors, and under insolvency resolution process we have different rights for them, then creditors who are adversely affected under a resolution plan, or their rights are inferior than liquidation, they will not be supporting insolvency resolution process. Then all the companies will be going into liquidation. Okay, so rights can't be different. It is only settlement. These are settlement proceedings, and settlement proceedings, you can't have different rights. Settlement proceedings are where jointly you sit together and with mutual consent you formulate something. You formulate a plan which is acceptable to all. So rights can't be different. Liquidation, in liquidation there is mutual what we call set off. Then that set off has to be applied to this one also, to resolution process also. Okay, so now let's move forward. We were discussing about approval of resolution plan. We were discussing as to the government's rights, where government is bound by the provisions of resolution plan, and which is provided under section 31. Only with respect to their past dues, the government is bound, not otherwise. Then, so the same thing, these slides contain the same thing which I have already told you, that provisions of approved resolution plan are not binding on any government or local authority unless the said provisions deal with any statutory liability of the CD. The said provisions, if relate to grant of any relief or concession other than reducing the past liability in respect of taxation, the same shall not be binding upon the said government, local authorities, unless the same is pursuant to the policy / consent of the said government or local authority, or provision of as per the provisions of the concerned law. Then there has been one amendment under Income Tax Act. that is section 156A has been incorporated, has been inserted under Income Tax Act. You know, under section 156, of Income Tax Act, notice of demand is issued. Now the question is that this notice of demand, can it be modified pursuant to a plan approved under IBC? So for example, if there is some in an assessment, there is some in some assessment there is some demand created, and in respect of the same there is a demand led notice issued under section 56. Okay, for example, 10 crore is the demand after assessment, and a demand notice under section 56 is issued. So earlier there was no provision for modification or revision of this demand. Okay, but now this pursuant to a plan which is approved. So now Income Tax Department, under Income Tax Act, this injunction has been there, as per which if suppose past liability has been modified, past liability has been reduced as per a plan approved under IBC, then under section 156A, the modification of the demand raised earlier can be made. Okay, so let's see what is written here. It has been noted that in cases of business reorganizations, instance to ensure future viability of such sick entities, and in the process modify the demand, created wide various proceedings in the past by the Income Tax Department as well, amongst other things. No procedure or mechanism provided in the Act, here we are talking about Income Tax Act, to reduce such demands from the outstanding demand register. Hence, in order to remove this anomaly, it has inserted a new section 156A. So 156A provides where any tax, interest, penalty, fine, or other sum in respect of which a notice of demand has been issued under section 156 is reduced as a result of an order of the adjudicating authority as defined in such and such section, the assessing officer shall modify the demand payable in conformity with such order, and shall thereafter serve on the assessee a notice of demand specifying the sum payable, if any, and such notice of demand shall be deemed to be a notice under section 156, and the provisions of this Act shall accordingly apply in relation to such notice. Where the order referred to in subsection 1 is modified by the National Company Law Appellate Tribunal or Supreme Court, as the case may be, the modified notice of demand as referred to in such and such is assessing officers shall be issued by the assessing officer shall be revised accordingly. So it says that if in the past some demand has been raised, 156 notice has been issued, for example, 10 crore demand was raised, and plan says that actually they will be getting only 25 lakh rupees as per the terms of the resolution plan, then assessing officer is now having the power to reduce the demand from 10 crore to 25 lakh. Okay, so under 156A1 of Income Tax Act, the power has been given to the assessing officer. So I think, shall we break for 10 minutes now?
Yes, sir.
Yes, sir.
Yes.
Okay. So it is what, 5:24. So after 10 minutes we meet.
Sure,
right?
sir.
Okay. Again.
Yeah. 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 हेलो मेरा वेबिनार भी चल रहा है ना 7 बजे तक इसको क्या हो गया
Is this session started or not?
Oh, no, we are starting it again, huh? 1 minute, please. Yes. Now, priority of tax liability in the waterfall mechanism.
Sir, I think we should start now.
1 minute. I think there is some problem. स्वास्तिका पेपर भेजोगे? I think I'll have to share it again. One minute. ये ना चल नहीं रहा था एक मिनट. हाँ, can you see it on your screen? Priority of tax liability in the waterfall mechanism. Can you
Yes,
see
it
it?
is. It
Yes,
is
sir.
visible.
Yes, sir. We can see. We can
Okay.
see.
Okay, okay. Huh. So, waterfall mechanism, section 53, you are aware that section 53 of IBC contains the waterfall mechanism under IBC. That means it provides as to how different liabilities will be treated in case of liquidation of a company. So order of priority, which is provided under section 53, it provides that the tax liability in respect of last 2 years preceding LCD, they shall be given a priority over the other operational debt of the CD. Okay, and then the liability, tax liability prior to this 2 years period, those have to be treated at par with other unsecured creditors or residual unsecured creditors. Let's see that. So distribution of assets, notwithstanding anything to the contrary contained in any law enacted by the parliament or state legislature for the time being in force, the proceeds from the sale of liquidation assets shall be distributed in the following order of priority and within such period and in such manner as may be specified. Namely, first of all, insolvency resolution process cost and liquidation cost. Second is the workman's dues for the last 24 months preceding liquidation commencement date and dues debts owed to secured creditor in the event such secured creditors have relinquished their security interest in the manner set out in section 52. So those secured creditors who have relinquished their security interest, they will come here. If they have not relinquished their security interest and they have decided to realize their security themselves, then they will not come here. So here only those secured creditors who have relinquished their security interest. So both of them workman dues for 24 months and these secured creditors dues, they will be on pari passu basis. So this is clause B. Clause C is wages and any unpaid debt dues owed to employees other than the workmen for the period of 12 months. So here 12 months dues of the workmen, of the employees. And in clause B, these were workers. And here these are employees. Huh? And workers' dues were for 24 months preceding LCD. Here it is 12 months. Okay, so first of all, insolvency resolution process cost and liquidation cost will be paid. After that, if there is suppose 100 crore rupees are there, for example, and 10 crore are the insolvency resolution costs and liquidation costs. So 10 crore will be paid, remaining 90 crore will be utilized as per B. and then we have to distribute the money as per clause B. Suppose out of that 60 crore go, then remaining will be 30 crore. So 30 crore will go to next clause, which is C. So 30 crore, after that we will see how much wages and unpaid employees dues are there for the last 12 months. For example, they are 5 crore. So then remaining 25 crore will be available to the further creditors. So then we will be having financial debts owed to unsecured creditors, that is unsecured financial debt.
Sir,
And
I have a query.
Yes.
Here.
Yeah.
So what is the status of this PF authority, ESI authority? They sometimes claim that they are under the first category, or they consider themselves at par with the wages. But I have come across a situation where the company had registered, but thereafter never deposited the PF, and the workers being the seasonal wage.
Okay. Hello.
Consider as they were claiming that their dues on the behalf of those workers, but those amounts were never deposited for the last 4 or 5 years. So now they were putting themselves into that category. So what is the status of the PF authorities and ESI authorities?
Okay. So as you know that section 36 subsection 4 clause 3, this clause says that following shall not be included in the liquidation estate assets and shall not be used for recovery in the liquidation. Okay, so these assets shall not be included in the liquidation estate assets. Section 53 says that the sale proceeds of those assets which fall within the liquidation estate, sale proceeds will be distributed as per section 53. But this clause says that these assets will not be part of liquidation estate, and this include all sums due to any workman or employee from the provident fund, the pension fund, and the gratuity fund. Okay, so actually what this section is saying is, or this clause is saying is, that sums due to workmen or employees from the PF, pension, and gratuity fund will not be part of the liquidation estate. But you are talking about liability and you are saying that they are not part of liquidation estate. Liabilities can't be part of liquidation estate. No? Assets can be part of, or can be part of liquidation estate, or they may not be part of liquidation estate.
Sir, sorry to interrupt you. What I could make out from this thing is that suppose a company is having a PF trust, separate PF trust.
I'm coming. सतीश जी मैं explain कर रहा हूँ, वही बता रहा हूँ, मैं वही आपको बता रहा हूँ. तो यहाँ पे जो language which has been used is all sums due to any workman or employee from the PF, pension fund, and the gratuity fund. So as we know, as your Satish ji was saying, that mostly earlier provisions were there, and even now I think provisions are there, where if a company is having, if an employer is having more than 500 employees or workmen, then they were allowed to have a separate trust which was being managed by the trustee to be nominated by them. Okay, so a trust is created, entire contribution, employer contribution is transferred to the trust, and then trust was required to invest that in different securities, and those were also prescribed. So separate funds were there for gratuity. Then we are having for PF and then pension fund also. So if you are having separate funds created, and in the fund, in those funds, certain investments are there, some funds are lying there. Okay, so this clause says that if suppose there is an amount of rupees 100 crore in that fund, this particular clause says that out of that fund, out of that 100 crore, to the extent of the liability of workmen, that will not be treated as part of liquidation estate. If in that fund 100 crore or amount of rupees 100 crore is lying and our liabilities are to the extent of 80 crore, then to the extent of 80 crore, that fund will not become part of liquidation estate. But if any surplus is there, then that will become part of liquidation estate. According to me, this should be the interpretation. However, the different interpretations have been given, and as per the, I think Honorable Supreme Court has also clarified, I am bound by the judgment of Honorable Supreme Court, and which says that if there is any liability payable by the CD towards these liabilities, towards these provident fund, pension, provident, PF, pension and gratuity, then in that case, to the extent of that amount of liability, that liability will be treated as the amount with for example, these liabilities are 100 crore and there is no separate fund. As per that judgment, and company is having assets worth rupees 500 crore. So as per the judgment, out of this 500 crore, 100 crore, that is the amount which is equivalent to the amount of liabilities towards PF, ESI, etc. That will not be treated as the part of liquidation estate. So liquidation estate will be to the extent of 400 crore. And this 100 crore will be treated as if the company is holding on behalf of the creditors. This is the interpretation which has been given. And I told you as to what is our interpretation, but now we are bound by the interpretation of Honorable Supreme Court. And I think that was in the matter of Muzarbeer Karamchari Sangh or something. So this was the interpretation. We are bound by the same unless there is any other judgment on this particular issue. Now, Satishji, you wanted to say something more?
What I was saying that suppose what you're talking about is when there is a PF trust or gratuity trust or pension trust.
Correct.
My query was in regard to the direct query from the PF department. If they say that suppose there are very few employees, say only 50 employees are there, and in that regard, if anybody had registered earlier and later on, it went to liquidation, and thereafter the PF department are asking for the liquidator to to accommodate their claim. That is in regard to those employees, those who are not traceable. And they file some of the unrealistic liabilities also, claims also. And in regard to those workers, those have never been registered also. So under those circumstances, when I confronted this situation, I handled it in this way, that you may have certain claims in regard to the non-filing of the periodical reports. In that regard, you may be treated only as an operational creditor, but you cannot claim something which is not identifiable.
Yes.
If a liquidator doesn't have any record as per se, the practical difficulty when a liquidator takes over, sometimes the records are not available. And at that point of time, if the records are not available, then how the liquidator seeks information from various authorities and from various departments, from the various sources. And when a claim comes from the PF department, at that point of time, if the liquidator asks, okay, what is the information available with you? Please share with me. How many of the members you have in regard to this company? Then they keep quiet. They are not able to provide that information. In that way, their claims are non-maintainable. This is the concern. So how can we reach to a resolution in this regard also?
Sir,
Okay. So,
Nilesh sir,
Haji.
Adding to Satishji's point, I encountered the same problem in one of the liquidation cases which has been recently given. The PF department submitted claim on the basis of presumption, presuming that these number of employees were there, and they called me for personal hearing in the for several times. I told them submit the details. They did not submit. So so that is and when it was confronted by the promoter, they say even the operations were closed on that date, and the PF department is claiming the dues for the period the operations were closed. They did not give the names who were the employees. So finally, they have passed one order. I rejected the claim, sir.
Okay.
Just to inform Satiji, I said on presumption basis, I cannot accept unless you substantiate the claim, means claim has to be supported with the proof. And
Sir,
I have the information from the promoter that though he was not cooperating, we have filed 19(2) application, but he has clearly stated that operations were closed on particular date.
Anilji,
Yes, sir.
actually, as you know that these authorities, different authorities, maybe PF authorities, income tax department, or any other authority. So they have to pass an order. They have to make an assessment. They have to finalize these demands and all those things. And if they pass that order, that becomes binding on you, unless you file an appeal against the same. So if suppose some appeal has been filed against this type of order, okay, then we have to pursue that appeal and then decide, or otherwise,
No,
I
sir.
think it's going to be a vicious cycle in that case. First of all, I would like to know that what is the protocol in this regard, that as Anilji was saying, that he went to the authorities. Rather, it should be otherwise. I mean, liquidator or the court officer is not supposed to go here and there.
No,
Otherwise,
sir.
it will become a very very bad situation.
No,
I mean, in
no.
that way, it will become a vicious cycle.
Satishji, kindly understand. I think we are aware that there is a judgment. I think Supreme Court judgments have been there as to whether these authorities, they are having the powers to do any assessment proceedings, appellate proceedings during the period when these proceedings are going on. So answer to that has been given by Honorable Supreme Court that yes, these authorities are having that power. So during the period when the CIRP process is going on or liquidation process is going on, the question is whether they can pass any order for determination of these liabilities. Okay, so they have that power. Now, question is that if they have determined that liability, then can we say as resolution professional that it is not binding on me and I will, based on my assessment, I will do it?
Yes, sir.
So that is a question on which I am not having any relevant judgment, and I'm not having any judgment on that issue.
No, but no, sir.
At the same time, Anilji, 1 minute. Anilji, at the same time, if suppose assessment order has been passed by some authority, income tax authority, for example, and huge demand has been created. Now, if we ask RP to file an appeal, okay, and then in appeal, appellate authority will be taking a decision. Then after that, further High Court reference can be made. Honorable Supreme Court can also be. So I think it will be never ending thing. And I think liquidation process can't wait for such a long period of time. So what should happen? So whether if some order has been passed, if we say that liquidator is bound by that order, then he has to consider the entire liability. And he can't apply his mind to the facts of the case. So then this entire
Sir,
thing.
there is a catch here also,
Yes,
that if
sir.
suppose we say that liabilities up to 2 years is applicable. If suppose suppose dues pertains to last 4 years or 5 years, and now if the department, income tax department or anybody, they are asking also for the penalty, interest, whatever. I mean, there may be several type of liability. Then what will be the cutoff for this 2 years?
Okay. So according to me, we were discussing that thing only. So according to me, now question is whether if the officer has created a demand, if assessing officer has created a demand, can resolution professional say that no, I'm not bound by it and I will determine it myself? Can he do that? I don't think he can. because he's not an expert about income tax also. He can't say that the demand which has been created is wrong or right. So I think the only option which should be available should be that there should be a appellate remedy and further, but that is unending. So I think there has to be some solution to the same. Presently, I'm not having any judgment where they say that RP will be the final authority on this issue. If assessment order has been passed, as per my information or as per my knowledge, that has to be considered, and that has based on the same you have to. But at the same time, you have the right to challenge that. If it is
Sir,
totally,
Sir, the law says, IBC says that it overrule other statute actually. So if that is a fundamental thing, I mean, out of that, there may be what you are saying that there are some judgment also, and Supreme Court is the supreme power, and wherever there is a confusion, they take the final decision. But still, the basic elementary thing which we all know that its role is prescribed, well defined also in the IBC, and that will supersede everything. So if we go by that, this is my understanding, and as you rightly said that if we have reference material, then only we can strengthen our view in that regard. But still, that may be one understanding.
Okay, Satish, actually, it is not correct that IBC will prevail over everything. IBC will prevail only when there is a thing inconsistent in any other law. Okay, so we can't say that everywhere the IBC will prevail. If IBC is saying something and other law is something it's saying totally contrary to the same, then IBC will prevail. Okay. So
sir, for like, because this session is relevant, so I wanted to understand which law, doesn't come under section 238.
Which law?
I'm talking about the statutory law, like GST, sales tax, income tax, where there is specific provision.
Where is there is specific provision? I have not understood your question.
Sir, we are talking about the overriding effect of IBC versus other statutes.
Correct.
So I think in one of one of the statute has that power which overrides IBC.
Some other law is having overriding power.
May I interrupt? Sorry, may I interrupt?
Yeah, yes, Mr. Anil.
There is no other. The section 238 does not of the code does not prescribe any other law which will where IBC cannot supersede.
No, sir.
They have not defined any law as such. So,
sir,
it has the overriding effect over all these statutes.
No, sir. He specifically and categorically said, like, if it is inconsistent with any other existing law.
Correct.
So
which law is that? Which law is that? Whether it is GST, sales tax,
I will tell you. Actually, as you know that this particular judgment has been there in the matter of rainbow paper. Okay, yes, so in rainbow paper, the issue was relating to GVAT Act, Gujarat VAT Act. Okay, so under Gujarat VAT Act said or says that the dues which are there with respect to Gujarat VAT, they will be having a charge, first charge over the assets of the SSC. Okay, so the plea was taken. This plea was taken that section 53(1) says that the dues taxation authorities dues will fall within 53(1)(e). So they can't be treated as secured. Reason is that act is that Gujarat VAT Act said that they will be treated as secured, and then plea was taken that IBC says that the government dues will be on a lower pedestal. They can't be equated with secured creditor. So this was the issue in that particular matter.
Yes.
Okay. So now, Honorable Supreme Court in that matter said that there is no inconsistency. IBC will not override this law, or IBC will override only when there is direct confrontation. When IBC says something or insolvent and that other law says something else. So Honorable Supreme Court said that GVAT Act only said that the dues will be secured, will be treated as secured. And then IBC says, IBC 53(1)(b) says secured creditor, how they have to be treated. It does not say only secured financial creditor. Okay, Honorable Supreme Court said that Gujarat VAT Act will be treated as secured dues and they have to be treated as per section 53(1). This act does not say that government dues, secured government due will also be falling within 53(1)(e). So they said that there has to be direct inconsistency, then only IBC will prevail. Otherwise, you have to attempt that both the laws, you have to give effect to both the laws. Okay, so only when there is a direct confrontation. I think let's come back to this one. So this is 53(1)(e).
No, sir, just one observation, sir. Going back to PF, as you said, there are three situations different. One is admission of the claim. When the PF department is submitting a claim, so along with the claim, it has to submit the proof.
Correct.
So that RP or liquidator, what I was talking about, the liquidator is supposed to examine the claim, and if the claim is not substantiated with the documents and the evidence, how can the liquidator accept? So that is one situation, sir. So it has to accept for which the supporting documents and proof has been submitted. The other situation is the assessment. We are not questioning the, we know the income tax PF department can continue with the assessment and pass assessment order. Assessment order is subject to different, sir. But admission of claim is different, sir. When they are submitting claim.
I'm coming. Anilji, can you understand, if PF department, he has passed some order or he has passed some order with respect to the demand, that company is assessed at a certain figure and the company has to pay such and such PF liability if they pass that order. Or in other words, in another case, suppose income tax authority is there. Income tax authority passes an order, income tax order, and they say that there is a demand of rupees 20 crore on the company. And based on the same, when he files a claim before you, he attaches that assessment order. Is he bound to attach all documentary evidence
No, sir,
along with the order?
I agree. No. Sir, I agree with you for income tax. I am
similarly for PF also.
Sir, PF, they are giving, it is at the stage of when I am giving a public announcement, then they are submitting the claim. And along with the submission of claim, they are summoning me for personal hearing. And there in the claim, they are saying this claim is on presumption basis. So it is not an assessment order, sir. It is not assessment. It is, they are in the process of determining their claim. That is a different thing, sir. I am not challenging, suppose they have passed an order, then subject that we have to consider, or we go to appeal, which challenge, okay. As a liquidator, if we do not accept that, they can, my submission is that in my case, they could not prove that the employees were there employed during that period. So how can I admit the claim?
ठीक है, अनिल जी देखिए, उन्होंने if they have passed any order and based on the same they are giving, if they are placing, if they are filing their claim based on that assessment order, okay, so I think they are not supposed to provide each and every document based on the same, based on which they have passed this order. Okay, so you should be bound by that order, but at the same time, if that order is not there and still they are, in that case, they will have to provide you the documents based on which they are.
Yes, sir. Yeah, so it is a first stage. It is not the stage of assessment order. If they pass a order, then I have to accept or I have to challenge.
Correct. So now coming back to this 53.
There is one more, sir, clarification I need, sir. As you said that if there is a no PF fund or gratuity fund or ESI fund, and there is a liability, now asset to that extent will not be taken into the liquidation estate.
Correct.
But now that liability is principal, interest, parallel interest, or only principal.
Okay. Okay. If you see the language which is used there.
Yes, sir.
Yeah. If you see
one more thing which I have experienced is that in one of the matter where I am appointed as a liquidator, the GST Delhi authority, Delhi GST has submitted a form, and I mean, they have also given some kind of declaration which was not as per the prescribed format also. And in one of the section, they also wrote that if you not process as per this claim, you will be personally liable. I mean, they have written to that extent also, as if they are threatening to the liquidator also, that if you don't abide to our requirement, then you will be prosecuted or whatever may be.
You're right,
And
Satish.
under the prescribed GST Act also, particular provisions of GST Act also.
I think it is Form 16A or something, if I can recollect.
Even the PF as Satish ji saying, even the PF authorities were calling me when I sent my representative. He said, no, call the liquidator. He said, you have to follow my instruction. I said, no. How? Why? Do you know? Understand the position of liquidator and what he is doing? Then I had to explain him in writing, give him 3 times reply. Then he understood.
I think it is not correct on their part. It is not right on their part to behave like this. But
sir,
yes,
four personal
practically
hearings. And he did not allow my authorized representative to appear on my behalf. Requested for my personal appearance.
All of us are facing this type of difficulties. So coming back to this one.
No, I'm just telling you, sir.
All sums due to any workman or employee from the provident fund, the pension fund, and the gratuity fund. Okay, so the word which is used is all sums due. All sums due to any workman or employee. Okay, so I think there is a judgment also on that. With respect to this particular issue, and they say the entire dues have to be treated.
Okay. Sir, can I? I'm so sorry to interrupt you because this is very pertinent. I mean, related to what we discussed a little while ago regarding that, claim submitted and substantiated with assessment order. Suppose the liquidator or the RP has some different opinion that assessment order is not up to the mark. So, how to deal with this kind of situation when admitting the claim, sir?
He can go for appeal.
I think you have to file an appeal against the
yes, because he is
till then, what will happen to the claim? That is to be kept in abeyance?
Yes, you have to keep that in abeyance. Yes.
Okay. RP is in the shoes of the management, na? So if the assessment order is not acceptable, RP can challenge and appeal it. We have done that.
If it is with respect to CRP process, you have to make a disclosure that such and such is demand, and such and such appeal has been filed and all that. Okay, so let's, I think, quickly complete this presentation. So the government dues are under section 53(1)(e). Any amount due to central government and the state government, including the amount to be received on account of the consolidated fund of India and the consolidated fund of a state, if any, in respect of the whole or any part of the period of 2 years preceding the liquidation commencement date. So last 2 years dues, they are on a slightly higher pedestal. And then here they have to be pari passu with the debts owed to a secured creditor for any amount unpaid following the enforcement of security interest. So if suppose some secured creditor says that I will realize my security myself. So suppose his dues are 10 crore and he is able to recover 5 crore out of that or 6 crore out of that. So then for remaining, he will be treated here on pari passu basis along with the government dues for the last 24 months. And then after that, any remaining debts and dues. Okay, so if any taxation dues are there for the period prior to last 2 years, they will fall under F, any remaining debts and dues. Otherwise, the dues will fall under E1. And if these dues are secured, then you have to treat them under 53(1)(b). 53(1)(b) Roman 2. Debts owed to a secured creditor in the event such secured creditor has relinquished security in the manner set out such and such. Okay, so we are having statutory dues. We have to treat them in 3 different ways. Secured dues, they have to be treated at par with other secured financial creditor.
Okay.
And then last 2 years dues have to be treated under unsecured dues. I'm talking about here 53(1)(e)(2), and remaining dues have to be treated under any remaining debts and dues. Okay, so this is.
I have one
How
query here.
three
Yes.
part for 2
Sir,
years they are at
will
par with the secured
Yes.
creditors.
Please tell me.
So I was just wondering, suppose there is the government dues are secured, so the operational creditors dues are secured. Will they also form a part of the COC, and will they have a voting right, and will they
No.
contribute to the CIRP costs?
No. Only financial creditors have to be there in the COC, not the operational creditor. Whether they are secured or unsecured, they will remain outside.
So, sir, they are secured only for a period of 24 months, not more than that, right?
No. If they are secured, then their entire dues will be treated as secured, and they will be pari passu with they will be forming part of secured debt, because it does not say only, it does not say 53(1)(b) does not say debts owed to a secured creditor in the event, owed to a secured creditor. It does not say owed to a secured financial creditor.
And
Okay.
sir, 24 months workman due. Beyond 24 months, that will be other dues, or it will be with the other employees?
No. Workmen's dues for the period of 24 months preceding liquidation commencement date. If workmen have not been paid for the last 3 years, for example, then 2 years dues will be getting priority here, and 1 year dues will be under that residual clause, which is any remaining debts and dues.
And so the government dues will be given priority over the operational dues, right?
Yes,
operational creditor dues.
Yes, you will see that workmen dues for the last 24 months, they are also operational debt. Workmen dues are also operational debt, but they are at par with the secured creditor under clause B. And then employees dues are slightly lower. Employees dues for 12 months, they are slightly lower in priority, they fall under C. But workers dues for the period prior to this 24 months and employees dues for the period prior to 12 months, they will fall under any remaining debts and dues, F. Similarly, government dues for 24 months or last 2 years, they will fall in E1, and remaining dues will fall under F, any remaining dues and debts and dues. Is that okay?
Sir, 2 years after, sir, for government dues for 2 years will be at par with the secured creditor.
No, those secured creditors who have relinquished their security, who have not relinquished their security interest and have realized their security interest, and for the balance amount they will come here.
No, we are talking about, sir, government dues. Government dues for last 2 years will be treated at par with secured creditors, is it?
Who said that? They will fall under E1.
E1, for 2 years.
2 years, and then see Roman 2C, what is written there? Debts to a secured creditor for any amount unpaid.
That is okay. That is okay. That is okay.
So
unsecured
one
but just what, sir, that these workman dues will not include PF ESI. They are treated separately.
Yes, for them separate treatment has been prescribed now.
Okay, fair enough.
Okay.
Sir, one query.
Yes.
Sir, there are 4 claimants during liquidation. One is financial creditor unsecured. Second one is financial creditor unsecured, but a related party. Then third one is GST department, and fourth one is ESI department. And the GST department has 95% voting rights. So who will get the priority of payment?
GST, it is consisting of only, no. If financial creditor is there, then GST will not be there, will not be having any voting power. You are talking about liquidation?
Liquidation, sir. During liquidation.
Okay, so under liquidation, they are having only recommendatory powers, yes. So as you told me that there is unsecured financial creditor, okay, then you are saying that GST dues are there?
No, sir. First is financial creditor unsecured, financial creditor unsecured, but related party.
Okay, so related
third
party.
one is
related party is at par with unrelated party. Related party is at par with unrelated party. You can't say that because related party has paid certain dues, has certain dues, then they will not be paid anything.
They will not be paid.
No, they will be at par with the unrelated parties.
Okay.
Related party and unrelated party, if they are financial creditor or they may be unsecured, they are at par with each other. Law does not say that related parties will not be paid. Though in resolution plan, what we do is that normally we don't provide anything. We don't provide any payment towards them. But if they become
then, sir, who will get the priority? My question is, who will get the priority of payments? GST department or these financial creditors?
So first question is, between both of them, they are at par, related and unrelated. Now question is, GST or unsecured financial creditor? Answer to that is unsecured financial creditor, because GST dues are the dues payable to central government and state government. They fall under E, and unsecured financial creditor, they fall under D. Okay.
Okay.
And GST, under GST law, they will not be treated as secured. I am having those provisions for you in subsequent part of this.
Okay, sir.
Priority of tax liability in the waterfall mechanism, we have already discussed all these things, that taxation dues, they fall within 53(1)(e), 53(1)(e), unless they are secured.
Okay, sir.
Whether
Thank you, sir.
Yes. Now see tax liability under different laws. Customs Act section 142A does confer or create first charge on the dues payable. Custom dues are secured. Section 142A says that custom dues will be secured. Then Income Tax Act does not say that their dues are secured. They are not having any charge over the assets. CGST, Central GST and even State GST section 82 of the Act provides for tax to be first charge on property except under IBC. Okay. So even if CGST dues are secured, but they say that the treatment has to be given, if under law it is 53(1)(e). So they say that they will be treated as under section 53(1)(e). So CGST will not be treated as secured, though section 82 says it is secured except under IBC. Okay, Income Tax Act not secured. Custom Act, yes, they are secured. Then this is section 140A of Customs Act. Achha, no, sorry. Custom Act also there is a provision. Yes, sorry. Custom Act also, here it is, I think is wrongly written. Custom Act also, section 142A says that these are secured. However, exemption is to this insolvency and bankruptcy code and certain other acts. So they will also not be treated as secured. Even custom dues are not secured. So
the word not has to be added.
All these three, they are not secured.
Yes,
Custom, income tax and GST dues are not secured for the purpose of section 53. So let's see, if notwithstanding anything to the contrary contained in any central act or state act, any amount of duty, penalty, interest, or any other sum payable by an SSE or other person under this act shall save as otherwise provided in section 529A, RDDB Act, SURFACI Act, and Insolvency and Bankruptcy Act. Okay, so 82, tax to be first charge on property. This is CGST Act. Save as otherwise provided in the Insolvency and Bankruptcy Code. Any amount payable by a taxable person or any other person on account of such and such shall be a first charge on the property of such taxable person on such person. Okay, so here also under GST also, otherwise it is secured, but not for the purpose of IBC. Okay. Role of tax authorities in the insolvency resolution process. So IT dues are considered as operational debt under the Insolvency and Bankruptcy quote, not only IT, any tax dues are treated as operational debt. Tax authorities should file their claim with the IRP/RP within the specified time period, along with all the supporting documents. They should respect moratorium provisions. They should check that their dues are considered in the resolution plan as per their entitlement. They should abide by the provisions of approved resolution plan. Now, this is one judgment of Honorable Delhi High Court in the case of National Saving Thread Company Limited. In this case, a resolution plan was approved by Honorable NCLT, and after that, Income Tax Department raised a demand. Okay, so in that case, Honorable High Court said, Honorable Delhi High Court said, based on the judgment of Ghanshyam Mishra and Sons Private Limited, they said that clean slate theory has to be applied, and once a resolution plan is approved, after that, no liability can be created by any authority. Okay, so that was set aside. That was the demand notice or assessment order was annulled. Once a resolution plan is approved, whether reassessment notice under section 147, 148 of IT Act can be issued or not. So here also, Honorable Delhi High Court in the matter of IREO 5 Rivers Private Limited, they said no. Once resolution plan is approved, what will be the purpose of reopening? Even if suppose you create a demand by reopening under section 147, you can't claim those dues because of this judgment in the matter of Ghanshyam Mishra. Okay, so Honorable Delhi High Court said that once a resolution plan is approved, then you can't do complete any assessment, you can't reopen any assessment. Tech Developers Private Limited versus National Faceless Assessment Center. Assessment after approval of a resolution plan. Once resolution plan has been approved, then again Honorable Delhi High Court has said that you can't reopen a you can't reopen a case because you can't create a demand. Impact of moratorium on tax liability. The moratorium provided by IBC aims to halt tax proceedings or coercive action against a corporate debtor during the moratorium period. Proceedings for recovery of tax fall within the ambit of moratorium. Okay, so they can't recover any dues from you. Apex Court in Sundaresh Bhatt emphasized that tax departments only have limited jurisdiction to assess or determine the quantum of tax and other levies. इसका मतलब ये हुआ that moratorium does not affect these proceedings. Okay, assessment proceedings are not affected by moratorium. So they can't demand any, demand any liability, demand any dues, but they have only limited jurisdiction to assess, determine the quantum of tax and other levies, even through other levies, even though various circulars issued by the tax administration have echoed this sentiment. It is not uncommon to see actions being undertaken by tax department, including search and seizure operations while the resolution plan is under progress. There is a need for strict adherence to the moratorium orders to uphold the spirit of IBC. A unified approach is required to align actions with regulatory guidance. Okay. Sundaresh Bhatt, the same judgment. Sundaresh Bhatt, liquidator of ABG Shipyard. Honorable and Supreme Court here said that IBC would prevail over the Custom Act to the extent that once moratorium is imposed in terms of such and such, the respondent authority only has a limited jurisdiction to assess, determine the quantum of custom duty and other levies. Okay, so they can't claim any, they can't recover anything, but they can continue the assessment.
Sir, can I interrupt you here a bit? So what would be the situation during this liquidation process?
Even there also. The
moratorium, like, they cannot, because see, it is up to the CRP date, I mean, during the CRP. But naturally that all this, I mean, whatever the claims are there, it will be increased by to the extent of like levy, interest on everything.
No, it is not. If they don't file, then you will be considering that on that basis. But they can file their claim under liquidation also, na? So if suppose they are considering, for example, you know that for submission of a claim, 30 days time period is there after initiation of liquidation. But if they still continue, because the same moratorium provisions are there, I'm not having any judgment on that particular aspect. But if they continue, they will have to file a claim before you. And then you can accept that only subject to the permission of Honorable NCLT, Honorable Adjudicating Authority. So even if they are considering, if they are continuing with their assessment, the claim, acceptance of their claim is subject to the approval of Honorable Adjudicating Authority. Okay.
Is it so? Is it so, sir?
Yes.
Because see, whatever, like, I'm getting a claim during this, based on my public announcement during liquidation process. So in order to admit the claim, I have to seek the permission of Honorable NCLT.
If it is filed after the due date.
After the due date, it is.
Yes, you have to.
Yes.
Not every claim. If it is filed in time, then you can accept that. Otherwise, you have to take the prior approval. You have to take the approval of NCLT rather.
So in that case, the amount may vary, like, whatever it was filed during the CRP and the liquidation period.
But they have to clarify, they will have to justify that yes, there is an order which is passed in between and all.
So suppose, sir, that process takes like CRP and liquidation, the gap is say around 2.5 years. So that same amount, the same claim, what persisted during the CRP would still continue, or it would get changed during this liquidation process?
No, if there is, suppose a long period has passed in between, then in that case, and if any liability has been, any assessment has been made during this period, then definitely they can revise, they can submit a claim for a higher amount,
Yes. They can submit their claim during liquidation. If they do not submit, the claim submitted during CRP will be accepted.
Yes. Court has imposed.
शर्मा जी एक clarification चाहिए.
Sorry, Narendra ji.
In my case, TDS deducted on rental income is being adjusted by the income tax department with the past prior to CIRP liability. Does it amount to violation of moratorium?
Correct. Right. It is violation of moratorium.
Yes.
Sir, I have a question. If the custom departments or these tax authorities do not file the claim, then of course there is no question of setting aside some amount for them or appropriating some amount.
No. If they have not filed, then in that case you are not required to.
Because so what happened that in my case, there was one assessment order by the custom authorities, and that was appealed by the CD. That appeal is pending.
Okay.
So I am now going to make statement before the SESTAT that since they have not filed claim, so there is no point in continuing these proceedings. So hope my understanding is clear, sir.
Correct. Because that is subject to actually, but if they file the claim belatedly, 1 minute, Anilji, if they file the claim belatedly, that can still be admitted, but with the permission of adjudicating
NCLT. Correct, sir. Correct.
But sir, by not filing the claim, it does not withdraw their right to pursue the legal proceedings. If they have not filed.
If they have not filed the claim, then definitely it will be inconsequential, na? If they have not filed the claim and that proceedings are still pending, but if liquidation proceedings are over, then these things will be of no consequence.
Sir, I have a submission here. Because I understand that sometime back there was a notification saying that IRP or RP or liquidator, they are supposed to write to the related department also. So
I wanted to say this only, Satishji.
Yeah.
That when we know that there are certain liabilities, I think we should pursue with them. Otherwise, there will be a situation where you have distributed everything, and still there is some authority who has filed a belated claim before you, and which is admitted by adjudicating authority. So I think to avoid that kind of a situation, it is advisable that if we see that in the books of accounts certain liabilities are there, and especially some statutory dues are there, I think we should approach these authorities and try to determine if their dues are there, and then we should ask them to file their claim. Even we should write to them that let them file their claim.
Yes, yes.
So the court has importantly observed that authorities could, however, initiate assessment or reassessment of the dues and other levies. The resolution professional has an obligation to ensure that assessment is legal, and he has sufficient power to question any assessment if finds the same to be excessive. Then ambiguity in the treatment of statutory dues under. So Ghanshyam Mishra, we are clear that if some liability is not provided in the resolution plan, so then that is not to be considered. Nobody can, these taxation authorities cannot claim that amount. If they did not file any claim and their dues are not considered in the resolution plan, then whatever is provided in the resolution plan, that is final. If suppose they filed a claim and the plan says that against their 100 crore, they will be getting 5 crore only. So if they feel that it is not as per law, they should file an appeal before Honorable Appellate Court. Or otherwise they will be bound by this treatment. Okay, so the claims provided in the plan will stand frozen. All such claims that are not part of the plan will be extinguished. So this is Ghanshyam Mishra matter in the case passed by Honorable Supreme Court, Ghanshyam Mishra and Sons Private Limited versus Edelweiss Asset Reconstruction Company. Consequently, all the dues, including the statutory dues owed to the central government, any state government or any local authority, if not part of the resolution plan, shall stand extinguished, and no proceedings in respect of such dues for the period prior to the date on which the adjudicating authority grants its approval under section 31 could be continued. Okay, so this is very, very important. It is clearly mentioned in this particular order of Honorable Supreme Court. Then SR Steel, in this matter also, the clean slate theory. So that was the clean slate principle that was laid down in this judgment. A successful resolution applicant cannot suddenly be faced with undecided claims after the resolution plan submitted by him has been accepted, as this would amount to a hydra head popping up, which would throw into uncertainty amounts payable by a prospective resolution applicant who would successfully take over the business of the corporate debtor. All claims must be submitted to and decided by the RP so that a prospective resolution applicant knows exactly what has to be paid in order to take over and run the business of the CD. This is the successful resolution the applicant does on a fresh slate, as has been pointed by as has been pointed out by us here in above. For these reasons, NCLT judgment must also be set aside on this count. Then this is sales tax officer versus Rainbow Paper Mills Limited. So all of us are aware that in this particular judgment, Honorable Supreme Court said that if under a law, it is provided that certain dues will be secured in nature, then you have to treat them as secured, and you have to treat them under section 153(1)(b). Okay, so this was the judgment of Rainbow Papers Limited. Okay, and actually through this judgment, by this judgment, an anomaly has been highlighted. And that anomaly is that the preamble of IBC says that the government dues, the priority of government dues will be altered. Okay, and then actually it is altered under section 53(1)(e). They find place there, but the word which is used under section 53(1)(b) is secured secured creditor, not secured financial creditor. Okay, so sir, if it is
sir, this is I mean, with reference to the Gujarat GV80 Act, what you are saying.
Correct.
Suppose on their own an authority issue a direction to the bank saying that this much amount is recoverable, and since the assessee is not traceable, so his account should be freezed.
Okay.
And the liquidator when take over and find that a particular bank account is freezed by the GST authority. Now, though they don't have the power as such, but they have the implied power to freeze the account. Now, under that situation, defreezing the account and getting it done is so cumbersome that even NCLT doesn't support.
Yes.
And one has to go to the High Court. And in that process, a small company which may have, dues for, very little say, and it has no assets as such, but the liquidator and the professional, and they have to face so many legal hassles.
Definitely, what you are saying is correct. And if they, so this is called attachment or freezing of the bank account. If they have done it, then under liquidation, they will have to defreeze it. Okay, and under CIRP also, I have seen orders where Honorable NCLT has directed, and they have released the money. Okay.
No, but despite the mentioned Supreme Court judgment also, the NCLT simply said that you go to the authorities again. This kind of support is there by the adjudicant authority. Then how the matters can be resolved?
Satish, in many matters, NCLTs have issued directions to these authorities to defreeze. Okay, so I think with the help of the same, I think NCLT should pass that order, because the jurisdiction definitely is with them. They must pass that order. Otherwise, how will liquidator distribute or complete this liquidation process? Okay. And this attachment, by creating this attachment, their dues do not become secured. So if under their law it is written that they are secured, then only they will be treated as secured. They will be treated as at par with other secured creditors. Okay. So I think all of us are aware of the facts of sales tax officers versus Rainbow Papers Limited.
Yes, sir.
Okay.
Achha, sir, one thing is that, during this process, suppose my COC consists of only government authorities. So are they because see, they are not meeting the CRP cost. They are very reluctant in providing the CRP cost. So how to deal with this kind of situation?
Actually, in that case, you can go to the adjudicating authority for issuance directions to them, because RP cannot work unless and until he is funded. He is funded for taking care of the CRP costs. Okay, so but you have to convince them, and if they don't contribute, then in that case you have to go to NCLT. Okay,
because see, all said and done, all many things they are pressing very hard for their recoveries and for their thing, but that in order to being in a part of COC, they are very reluctant,
correct.
And the CRP gets stuck in that way.
Yes. In many cases, this type of problems I have seen that is being caused. So this was Rainbow Papers Limited judgment. The objection against the resolution plan was not maintainable, given that the resolution plan was already approved by the Committee of Creditor. Section 48 of the GF does not prevail over Section 53 of IBC, and government cannot claim first. And this was the decision of NCLAT. NCLT held that resolution plan was not maintainable, given that resolution plan was objection against resolution plan was not maintainable because resolution plan was already approved. So this was NCLT. Then NCLAT said that I think we should go to Supreme Court judgment. Charge created under a statute would create a security interest in favor of the statutory authority, making such statutory authority a charge holder and thereby a secured creditor. Section 48 of GVAT Act is not inconsistent with Section 53 or any other provision of IBC. Debt arising out of or in connection with the GVAT Act will be secured debt and will fall under Section 53(1)(b)(2) of the IBC, which provides for priority of dues to secured creditor. Supreme Court set aside an NCLAT order in that matter. Okay, so this was this matter. Then there was another matter of Pashchimanchal Vidyut Vidran Nigam Limited versus Raman Ispat. So in this matter, Honorable Supreme Court said that that this was a wrong. They referred to this this judgment of Rainbow Paper, and then they said that it was a bad law. They said that whatever earlier bench has done is not correct, and so in a way they said that it should be restricted to the facts of the judgment should be restricted to the facts of this particular matter only. So this type of things were said about this. However, there was further judgment by Honorable Supreme Court. I will come to that. The relevant paragraph is the court overturned the notion established in the Rainbow judgment and stated that the Rainbow judgment had disregarded the waterfall mechanism outlined in section 53 of IBC. Court found fault with the reasoning behind the earlier decision and highlighted its potential negative impact on investments in entities indebted to government bodies. Thus, it reverted to the previous status of the waterfall mechanism and ordered the liquidator of RIPL to settle the PBNL's dues as per the provisions of IBC. So, Honorable Supreme Court in this particular judgment said that Rainbow judgment is wrong. And then so this is another judgment. Supreme Court relied on Acha. So they refer to this Sundaresh Bhatt judgment, liquidator of ABG Shipyard. So in this case, you are aware that in the Sundaresh Bhatt judgment, the Central Board of Indirect Taxes and Customs was stopped from recovering its dues through sale, confiscation of assets of the corporate debtor. Okay, and they were asked, these authorities were asked, Custom Department was asked to submit a claim with the RP. They wanted to sell the confiscated goods, but Honorable Supreme Court in this matter said that no, you can't do that, and you have to file a claim with the RP, and these assets, they belong to the company. You can't sell them. Review of Rainbow Paper judgment. So all of us are aware that in 2024, I think maybe in February, this order came, which was with respect to review of Rainbow Power judgment. And in this particular matter, Honorable Supreme Court, and it was submitted, the review petitioner submitted that the Supreme Court in the Rainbow had failed to consider the waterfall mechanism under section 53 of IBC. So this was the plea. And then SC observed, Honorable Supreme Court observed that review petitions have been filed primarily on the basis of observations made by Supreme Court in Paschimantchal Vidyut matter. Supreme Court observed, this is important, Supreme Court observed that strength of the bench in Paschimantchal Vidyut judgment was the same as the strength of bench which had delivered the Rainbow Paper judgment. So they said that earlier Rainbow Paper judgment was delivered by a 2 members bench, and similarly PBBNL Paschimantchal Vidyut was also delivered by 2 member bench. Given this observation made by Supreme Court in PBBNL judgment cannot be used as a ground to review the Rainbow Paper judgment. So they refused to review that ground. They said that because the subsequent court of equal strength cannot say that the earlier judgment was bad. They were not entitled to say that. The Supreme Court held that Rainbow Paper judgment has considered the waterfall mechanism and other relevant provisions of the IBC. Thus, there exists no ground for maintainability of review of the Rainbow Paper judgment. So review was rejected by Honorable Supreme Court. And they said PVNL Paschimantchal Vidyut observations, they are of no consequence. So that means they upheld the Rainbow Paper judgment. Then these are certain other judgments. Jet Airways Maintenance Engineer Welfare Association versus Ashish Chacharia. This was with respect to GST dues. NCLAT New Delhi observed that ruling in the Rainbow Paper Mill judgment could not be applied in Jet Airways case due to the specific exemption under section 82 of Maharashtra Goods and Services Act. Here in this case, GST Act, as I told you that under GST Act says Maharashtra GST as well as Central GST. Section 82 says that against IBC, they will not be treated as secured, their dues will not be treated as secured dues. So on the basis of the same, Honorable NCLAT New Delhi said that the dues of GST, Maharashtra GST will not be treated as secured. Sri Metallic also, the same view was there with respect to custom dues. So they said 142A of the Custom Act says that their dues will be secured. Their dues will be having a charge over the assets of the SSE. However, the same will not apply in the case of IBC. So under IBC, they have to be treated as unsecured. So this was Delhi High Court in the matter of Sri Metallic's case. Impact of dismissal of review of the Rainbow Paper. All of us are aware that now Rainbow Paper review has been dismissed. So all these statutory creditors, they will be treated as secured. Not GST will not be treated as secured because their law says that except under IBC. So under IBC, they will not be treated as secured. Custom will not be treated as secured. Income tax also will not be treated as secured. Okay. However, if there are any other dues like Gujarat VAT Act, so Gujarat VAT dues will have to be treated as secured. There are other judgments also, like we have with respect to Noida authorities dues, Greater Noida authorities dues. It has been now held that their dues are secured in view of Rainbow Paper judgment. So impact of this judgment will be, though it is contrary to the policy decision taken or as reflected in the preamble of IBC. However, preamble, the provisions of a particular section, they are binding, not the preamble. Preamble can be, we can take the help of preamble for the purpose of interpretation of some provisions of law if there is ambiguity. But if provisions are totally clear, then we can't refer to the preamble and say that no, preamble is saying something contrary. In that case, the words which have been used, if they are ambiguous and clear, then in that case, the provisions of a particular section that will apply. And then relevance of preamble will not be there. So as a result, now a number of resolution plans are there, which will not get approved because huge liabilities are there of a number of authorities and who will now be treated as secured. I think now requirement is that the government of India should and Parliament of India should change the law and they should remove, they should de-recognize this statutory charge thing. I think with this, we can.
Sir, can you suggest or cite some, like, if you have come across the recovery from the GST department, which has failed to recover their dues from IBC process? I mean to say that, especially in the capacity, can they recover? Suppose they have failed to recover during this CRP or liquidation process from the promoter or director of the company under the GST law?
Okay, you are saying that they have failed to recover from the company.
Yes.
Whether they can now claim it from the GST. I have seen most of the provisions, even Income Tax Act is, most of the laws, most of the taxation laws provide this type of a clause that if intentionally you have, if you have not paid or you were instrumental in avoiding payment of these taxes, violate, you have voluntarily, because of you
carried the business to defraud creditors.
Sorry, if because of your acts, the department's dues have not been paid, then you are personally liable. Most of the laws I have seen that, and I think in private limited companies it is there. Public limited companies, if their active participation is there in avoiding payment of these dues, in that case they may also be held liable, but not otherwise.
So any particular section of GST, if you could recollect?
No, I don't remember.
Okay.
But, IT Act, I think in Income Tax Act, there is a specific, in GST also there is a specific provision. I don't remember as to which particular section, but according to me, yes, these provisions are there.
Sir, in case of income tax, if you do not want to go for an appeal, can we ask them to just file a claim and continue? Or should we actually, be attendants at all those anti-evasion notices and entertain appeals? Because unless the appeal is not in the benefit of the corporate data, should we go ahead with, the appeal, or can we ask them to put a claim instead of, opening all assessments of the prior years?
No, actually, if suppose some order has been passed during your tenure, so I think you should, and you feel that it is strongly been assessed, some demand has been created which should not have been created. So I think you should file an appeal against that. And though they will be definitely they will be filing claim, and if they are not filing claim, I think you should ask them to file their claim, and you have to admit their claim based on whatever order is there. But at the same time, you will be disclosing in your IM that yes, there is an appeal which has been filed. Okay, and then the filing of appeal may become infructuous. Because the creditor, the income tax authorities, they may not get anything, because even if suppose that entire demand is accepted, okay, but they are on a low pedestal there, because they are at 53(1)(e), so they may not get anything. So in that case, I think at least you have to make your compliance. If there is a demand, I think, and you don't do that, tomorrow somebody may raise that issue. So better is that you bring it to the notice of the COC, and then you should file it also.
Sir, during this pendency, can they be invited to attend the COC? Suppose they are having more than 10% of debt.
In that case, you are bound, yes, if their dues are more than 10%.
But sir, but their claim is under verification.
Verification. No,
Yeah.
if you have admitted, then only. If you have not admitted, then in that case you will not. But you at the earliest you should not keep it pending, and then you are snatching away their right to be present in the COC meeting. So if this type of a situation is there, that they may become 10%, more than 10%, in that case they only have the right to be present there and to observe. They don't have any voting right or any other right. Okay, so
sir, my question is, sir, whether they should be allowed, even that they fall in 10%, but that their claim is not crystallized, it is under verification.
No, but verification is being done by you only, no?
So it will take some time. Suppose the first COC meeting is due. I couldn't do it because the time is not ample to scrutinize all those documents.
Okay, but if you feel that their claim amount may be higher than 10%, in that case, even if you have not, even if you have not admitted it, you can invite them, and you can specifically disclose to the COC that their claim is under verification. However, what they have claimed is more than 10%. So out of abundant caution, you have invited them.
Okay, that is a good practice.
Sir, my submission is that during the moratorium, if suppose the department has also raised a demand, as no fresh case can be filed in any court of law, even what do you think that if the appeal can also be filed during the moratorium?
Sorry, in liquidation you are saying?
Yeah, liquidation or CIRP process. I mean, if such thing arise or such demand arise, can we go for appeal during the moratorium?
You can definitely do that. It is not a suit. It's not a suit. So if any demand is there and you feel that it is wrongly made, then definitely, as Supreme Court has said, Honorable Supreme Court has said that during moratorium you can't recover, but you can assess and reassess.
So there was a mention in, when we were discussing that, there are credits, that tax credits, and there is a tax liability. When the credits are to be taken by the resolution applicant, and the liabilities is what he's not interested, he's not obviously going to pursue. He's given some value against the liabilities and he wants to continue. So there was a case law you were referring to. Have you had your hands on the case law? Will you be able to share it after this webinar?
There are certain case laws which say that this should not be done. The setup should not be done. I think Anilji, you were saying, Mr. Anil Kumar?
laws so that
Sir,
we just have it on records.
Yes, Mr. Anil Kumar, you were saying that there was some in your
yeah,
some order.
in one of my cases, but that was not with regard to the tax department. That was with regard to the company which has supplied the goods and bought the goods for the corporate debtor during CRP.
But they are not allowed set off.
They were not allowed set off.
Why don't you share that order with her?
Okay, I'll share.
Huh?
Thanks.
Okay.
Sir, one question. If in income tax, if you while presenting the resolution plan, if the creditors have been written off, whether that will be taxable.
Yes. So yeah. So kindly understand one thing, that whatever past liabilities are there, okay, so they will not be payable, or they will not be on approval of a resolution plan, they extinguish. Now question is that liability is written back. It is written back in the financial year in which resolution plan is approved. Okay, or as on the insolvency commencement date. Okay, and assessment year is subsequent to the same. So suppose resolution plan is approved as on today, for example, in September 2024, it becomes liable, it becomes taxable only subsequently. That means in assessment year 25-26. So whether this liability is to be treated as liability prior to ICD, insolvency commencement date. So my answer to this is that let's take an example, that if in a company assets are only 50 crore of rupees, value of asset is only 50 crore of rupees, and liabilities are, for example, 500 crore. And those 500 crore now, because value of asset is only 50 crore, so that will be settled only for 50 crore. Creditors will be getting 50 crore only. So that means 450 crore will be written off. And 450 crore, if we apply tax on the same at the rate of 25%, so it will be how much? It will be more than 100 crore. So can anybody, any resolution applicant will be taking over this type of company where value of asset is only 50 and the liability which will be arising as a result of write back will be 100 crore. So I don't think anybody will be taking over this company. And then according to me, because this liability, when we restructure the balance sheet, it is as on insolvency commencement date.
Yes, sir.
So insolvency commencement date, when we are restructuring, then the write back relates to that day. Write back is as on that day. Okay, and tax liability is also arising out of that write back. So
and the sir, write back has not benefited to the SRA.
No, but resolution applicant is benefiting from the assets. If any liability, according to me, this liability relates to the period prior to this ICD, or as on the ICD date. It does not relate to the period after the ICD. So in that case, it should extinguish.
Yes. So SRA is not getting any benefit out of that.
But sir, most of the plans which are approved by the NCLT, where if any relief is asked for income tax, this state to approach the authority. Now, no authority will give answer for it up.
Okay.
So section 32A.
Actually, no. Two things are there. One is future reliefs and concessions. Future reliefs and concession, NCLT is not having the powers to give. So for that purpose, Honorable NCLT will be asking you to approach the relevant authorities. Okay. Second is past dues. Past dues have to be waived if 41(1) or section 28(4) liabilities arising as a result of write back of some liability. Then I don't think it's a future relief. According to me, it's a relief which is giving rise to a liability which stand waived as on insolvency commencement.
Yes.
Okay.
Yes, sir. Because the fair value liquidation value has been considered of the competitor.
At the same time, ask your resolution applicant to write that very clearly in the resolution plan. Okay.
Fine.
Kindly share, sir, kindly share this PPT with the institute so that we have some very valuable,
Sure, Rajkumarji, I will share. Okay.
Okay.
Right. With this, we close today's session. Thank you very much, everyone.
Thank you, sir. Thank you.
Thank you, sir. Thank you.
Thank you very much, sir, for
Thanks.
giving your valuable time and share your inputs with us.
Thank you very much for giving me this
Sir, please share the
Thank you, sir.
PPT with me.
Thank
I
you,
will
sir.
share with the
It was quite good.
participants.
Okay. Right. Thanks.
Thank you, sir. Thank you.
Thanks, Anilji. Thanks, everyone.
Thank you, sir.